Hi, I'm John White from jwfinancialcoaching.com, back today with another video. And today I wanted to take some time and talk about what the FICO score is and what the FICO score isn't. And I know you've heard about the FICO score before, and on the personal finance world, whether it's on the blogosphere or on Twitter or in books, the FICO score is one of the most debated topics. So we're going to talk about what it is and what it isn't, and give my opinion, and hopefully dispel some myths about the FICO score that's out there and determine how important it is. And the FICO score is a way for banks and other lending institutions to determine someone's creditworthiness. And if you ever apply for a mortgage or a car loan or a credit card, one of the first things that banks will do is look up your credit score and determine whether you're a good risk, because that's what it was originally developed to, was to help creditors determine whether someone was a risk, high risk, low risk, to pay back their money. But what the FICO score isn't, it's not the only way to get money if you want to get out a mortgage. There's other ways to get a score that you can take to banks, such as eCredible, which take into account other factors besides debt payments, such as rent and utilities. And it's a great way for people who may not have had, quote, established credit to get a score and to take the banks to determine whether someone is a risk or not to pay back the loan. The credit score is also used to get better interest rates on loans. If you have a low credit score and you take that to the bank and they approve you for a loan, you're going to pay a much higher interest rate than the going rate because you have a low credit score. The FICO score, however, is not a way to pay off your debt. It doesn't matter what your credit score is to pay off debt. It won't help you one iota to pay off your debt, because the problem with debt isn't your interest rate, it's the fact that you have the debt. And so you can pay off your debt no matter what your credit score is. It doesn't help you pay off your debt at all. The FICO score is, however, a history of how well you have paid back debt. And if you have a high score, that means that you have done a good job of paying back your debt payments, whether it's a credit card payment, student loan, car payment, other kinds of mortgages. And if you have a lower score, that means you've missed some payments in the past. What the FICO score is not a measure of how well you're doing with money. It doesn't take into account other factors such as how much money you earned, or how much money you have saved in the bank, or how much money you have put away in your retirement accounts. It's all just is based on debt, and more debt. And I've talked with plenty of people and worked with and coached with people who have, quote, good credit scores, but are struggling to pay their bills each and every month and get ahead and build some savings in their retirement accounts or in their bank account. And I've talked with other people who are not concerned with their credit score, who are doing very, very well financially. And they're not trying to impress the bank with this big score. If you can tell by listening to this, I'm not a big fan of the FICO score, because I want you to focus on building wealth and money into your bank account and not your stupid score. I think the banks have done a great job of convincing us that we cannot win with money and get ahead in this life unless we have a great FICO score. But the thing is, please hear me, don't be defined by your credit score. It's simply a 3-digit number. Don't let that give you value as to who you are or aren't as a person. I'm John White. Thanks for checking us out today at jwfinancialcoaching.com.